Welcome to today's market report. European stock markets edged lower on Friday, weighed by concerns that the region's patchy vaccination program will lead to a slow recovery from the COVID pandemic. DAX in Germany traded 0.1% lower, CAC 40 in France rose 0.1%, FTSE 100 dropped 0.3%. The tone was set by a string of worse-than-expected readings for industrial production across the Eurozone, with German industrial production unexpectedly falling for a second month in February by 1.6%, and French output contracting 4.7% instead of growing by 0.5% as forecast. It will need an explosion of manufacturing and construction activity in March to prevent the German economy from falling into contraction in the first quarter of the year, according to analysts. Continental Europe has struggled to cope with the third wave of the COVID-19 virus, exaggerated by the region's lack of success in organizing a concerted vaccination program. This hasn't been helped by growing worries over the safety of one of the most prominent vaccines. Italy, Spain and Belgium have joined other European countries in limiting the use of the AstraZeneca vaccine, even after the European Medicines Agency on Wednesday repeated that the benefits of the drug outweigh the risks of very rare cases of blood clots. The lack of common guidance within the EU over the use of the drug can only increase public hesitancy, slowing the chance of the region achieving widespread vaccination. The economic news elsewhere was more promising, with China's March factory gate prices rising at their fastest annual pace since July 2008. Climbing 4.4% year-on-year, far above February's 1.7% growth. In corporate news, Atlantia stock rose 1.3% after the Spanish infrastructure group ACS expressed interest Thursday in taking a stake in the Italian conglomerate's motorway unit. TUIGn stock fell 6.4% after the travel company said it planned to offer convertible bonds worth €350 million to improve its liquidity position. Airbus stock rose 3.1% to its highest since the start of the pandemic after the French planemaker reported slightly higher deliveries in the first quarter. Oil prices drifted lower on Friday, with traders trying to digest the competing inferences of rising supplies and a global economic recovery that is gradually gathering steam. US crude futures traded 0.4% lower at $59.36 per barrel. Brent contract fell 0.6% to $62.82 per barrel. Both contracts are on track to the posting of a drop of between 2% to 3% this week, following the decision late last week by the OPEC Plus to gradually increase supplies by 2 million barrels per day between May and July. Gold futures fell 0.7% to $1,746.35 per ounce. On the FX front, GBP/USD has been under pressure as Brexit concerns join COVID ones. Meanwhile, the dollar may be poised for a comeback after several days under pressure, which leaves the cable at risk of losing the 136.70 critical support. Riots on the streets of Belfast exactly 100 days after Brexit serve as a stark reminder of the implications of Britain's exit from the EU and its complicities not only for trade but also for peace in Emerald Isle. Hesitancy around taking protection against the virus is set to rise after experts found a link between rare blood clots and inoculation. Another downside drive for the pound is profit-taking, which followed 7 weeks of gains. The US economy is still on course to outperform its peers. A bump up in Chinese consumer and producer prices in March may serve as a hint that US inflation may also advance, forcing the Fed to raise rates sooner than later. critical support awaits at 136.70, which was March's low point. It is followed by 136.10, a cushion from January, and then by the February trough of 135.65. Some resistance is at 137.05, a low point in late March, followed by 137.80, the weekly high, and then by 139.20, which worked as support last week. Euro-dollar continues to struggle to clear its 200-day average at 118.92, and the current strength stays seen as a temporary and corrective move higher. The US dollar edged higher but remains anchored near two-week lows following disappointing jobless figures, and with the Federal Reserve showing no signs for changing its ultra-easy monetary policy stance. The dollar index was up 0.2% at 92.278. This is today's market news. Thanks for listening. We'll see you next time.